The September jobs report shows the U.S. added 263,000 jobs last month. That's better than economists' expectations of 250,000. And the unemployment rate fell to 3.5%. But those estimates are attributed to the fact that 57,000 workers dropped out of the workforce, called it quits. So here to discuss, personal finance expert, University of San Diego finance professor, Dan Roccato. So Dan, here's what's fascinating. I would love you to help me understand. So there's this estimation that because we're adding this number of jobs, it's actually a bad sign because it means that the Fed will continue to raise interest rates, worried about a frothy economy and continued inflation. What do we make of this? Good sign or bad sign for the economy?
Yeah, well, it depends who you are. Good morning, Will. And you did a great job explaining it. Good news in this case is actually bad news, because it does mean the Fed is going to continue raising interest rates, soon to be for the sixth time, to battle this beast called inflation, which, by the way, Will, they brought on as well as government policy, misdirected policy in terms of stimulus, I might add. They're the ones who caused this inflation problem that we have now, and they're working like heck to try to get us out of it.
And Dan, and it's kind of like you got to make the soup not too hot, not too cold. Like, how do we get out of this? You raise interest rates so high, you shove us into a recession, right? Yeah. But you don't raise interest rates, and inflation continues to spiral out of control. I don't know how they thread this needle to a place, to a healthy economy.
Yeah, you're right. Listen, the medicine is sometimes worse than the cure. The Fed has admitted themselves that we're in for a pretty bumpy ride here. Think of it as we're on the airplane and we're looking for a soft landing, the best of all worlds. The economy slows down, inflation slows down, no recession. Or we're in for a very bumpy landing, which means interest rates keep going up, the economy really slows down, folks start losing their jobs. We win the battle with inflation, but the cost, is going to be quite high. Consumers paying more from everything from credit cards to mortgages. So really quickly, Dan, I want to move on to another topic, but I think I can picture the hard landing. It's a deep recession, high interest rates, then a deep recession. What does a soft landing look like? How do they, if they thread that needle, how do we know what's happening? Yeah, and I'm somewhat optimistic that we can do this if we're smart. So basically, rates keep going up at maybe a more moderate clip. We do lose some workers. Unemployment does start to go up a little bit, but not crazy. Right? We don't get some numbers like we did back in, say, 2020 or 2008. It can be done. The likelihood, however, looks increasingly unlikely based on the data we're seeing right now. Oh man, that's not optimistic, Dan. And this is probably further evidence of that. Americans saw, this is a headline in the New York Post, Americans saw the most severe pay cut in 25 years under Biden. And that, I'm sure, Dan, is attributable to inflation. Yeah, this bothers me more, to tell you the truth. Here we've got, let's take the average family making about $100,000 a year, but mom and dad both working. After inflation, after everything is sort of factored in, they just took a $3,300 pay cut. That's real money. That's a lot less trips to Dairy Queen, maybe a less trip to Disneyland, who knows. But it really pinches families' wallets, and as well as you and I reported before, disproportionately it hurts middle-income families, lower-income families. Upper-income families, they don't feel the pinch of inflation as much as the rest of us. Well, Dan, I'm sitting here thinking about what does that mean for all of us, our 401ks, our retirement plans, what we're doing in the next 6 months, trying to figure out whether or not this economy is going to hit a hard bottom or not. We need to continue to talk about it as we try to anticipate the future. Dan Roccato, thanks so much. Thanks, Will. All right.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.